Okay, let's go. So hello everyone. Thank you for joining us for this third and last session of our educational webinar series. We thought the timing was really good, to go back on, the concept, the use cases, the valuation of crypto assets, to share our views. And for this last session, we're going to go a bit beyond and giving you our views about, what happened this year, what is our outlook for next year, why we think the current environment offer a good entry point in the asset class. And lastly, we will cover how to integrate this asset class into traditional investment portfolios. So prior to jumping into our presentation with Dramane, our head of product in the US and in Europe, I'll just read again a disclaimer. So this webinar and its corresponding presentation are for informational purposes only. This presentation is not an offer to buy or sell, nor it is a solicitation of an offer to buy or sell. So that being said, to kick it off, we want to give you a recap of what happened this year and share our outlook. So, to start, I think 12 months ago, many traditional and conservative investors thought it was the end of the blockchain technology and the crypto assets, and 2023 has proven that they were wrong, and that we think that 2023 has been a great year for the asset class. So we saw Bitcoin and Ethereum coming back with great performances for the year. On the correlation point, despite a strong correlation in 2022 because of the fact that we were in a bear market, we see the correlation to equities going down this year. So showing, that this asset class could be a good decorrelation tool. On top of that, at a technology level, we think that the infrastructure of smart contract and layer 2 is getting stronger with scalability solution coming to the table that could enable this network to be used by billions of users. Also, we see traditional asset managers trying or starting to think about offering a product with crypto assets as underlying. We see also traditional businesses integrating these technologies for their client service or for their in-house processes. Also, the central bank are looking at the asset class and how they could, create efficient central bank digital currency. In terms of regulation, regulation is coming, regulation is progressing, and the more regulation means the more institutional adoption. And last point, super interesting year for Bitcoin that has evolved from his historical super risky asset to a denser, going from being a risky asset to being a store of value. So we saw that during the banking crisis in the US, but also in some tension period for the US long-term rate. So all in all of that to say that, we think it was a reinforcement here for the asset class. And all of that, creates that, create the fact that the forces today we see are more on the upside than they are than on the downside.
Yeah, and I think it was a very interesting year, right? Given where we started and where we ended. I think with all the backdrop that Ben just talk about, what we like to look at is, you have the price performance at the end of the year, and we're looking at certain crypto asset, Bitcoin, the Nasdaq crypto index, which is an index of the crypto market, so sort of the benchmark of the crypto market, and Ethereum. All of them are doing so much better than traditional finance counterpart, and this is like Nasdaq 100 or the S&P 500 or gold, right? I think, and it's really helped capture. At the beginning of the year, would have been a risky, or would have been a daring trade to invest in crypto given where we were. But lo and behold, 12 months down the line, you would have had you would have enjoyed that performance. And I think it's also comparing the magnitude of that performance to that of the other asset classes. We're talking about 2x or 3x what S&P 100 did. That's like for, Bitcoin, Ethereum, or Nasdaq crypto index. And that's sort of what we like to leave investor with, which is, crypto is it's an emerging asset class. So investing in crypto sort of required to have a conviction, but it pays to do so. And a small allocation to crypto will not increase the risk profile of your portfolio all that much, but it has tremendous potential to add additional return and diversified source of return. If you look at how crypto has been performing compared to gold or compared to S&P 500. So that's how we think about the 2023 in terms of asset class performance. And there's also that sort of also shape our outlook for 2024, isn't it, Ben?
Absolutely. So we published last week our crypto investment outlook. So it's available on both our European and Swiss English website. Feel free to consult the document and come back with questions. But in a nutshell, the key element is clearly what is going on in the US with the potential approval of a spot Bitcoin ETF. That will mean that a very big amount of capital, from private banks, financial advisors over there, will finally be able to access to the Bitcoin market. So for us, this is a clear sign, and also I think this is something that could be a tipping point in the adoption in Europe by traditional investors. We think that once the SEC will approve, these traditional asset managers and us among them, to have a spot Bitcoin ETF, it will kind of give a shield, a reputational shield to the most traditional investor, to go from, no, we don't want to touch crypto, to, maybe we can touch crypto if the SEC approves, if BlackRock is going, into this market. So that's very important, and all of that to be put also in perspective with the halving, the macro condition, etc. Maybe Dramane, if you want to detail a bit the key three themes on our outlook.
So I will not give all the spoilers because we want you guys to read the outlook. But I think there are three themes that are shaping the year to come. I think the first one is entering the ocean of TradFi. I think crypto has been largely so far supported by a small subset of players. Some of them are crypto native players like us, but we are small. And you have certain large institutions, but they are very, very small. The crypto endeavor is like very limited. What we think would happen in 2024 is there's going to be more traditional finance, more institutional people joining in the crypto trade. And that's why we're thinking we're moving from a river to the ocean, because when you have the large banks in Europe, the large asset managers in the US starting to support crypto product, the addressable market becomes pretty much, trillions, hundreds of trillions of dollars. So that's going to be very important. The second key theme for the year, it's going to be, crypto is built on blockchain technology. And what we've seen is, despite the bear market, despite the regulatory risk, and despite all the lawsuit and all that, the technology has been making progress, and more people have been using it. And we even see more and more financial institution, large companies using the blockchain technology either for payment or to issue securities, as we've seen with Société Générale in Europe a few weeks ago, but also Siemens a few months ago in Germany did that, right? But we've also seen some of these large institutions issue NFTs and use blockchain technology for all the other things. So we think the underlying technology is going places, and it's going to be more and more adopted. And the more the technology is adopted, the more value accrues to the network behind it, and that will be tremendous. And the third thing is that you just have a confluence of good factors that we call tailwind, and they are like macro tailwind. It's both the macroeconomic situation that is improving from inflation and also monetary policy, but it's also that if you have a Bitcoin product approved in the US, a Bitcoin product that is supported by some of the largest financial institutions in the world, it will be easier to distribute that. So you will see a lot of capital that is sitting on the sideline find its way into crypto. So that's the third thing, which will be there's like very significant tailwind that favor new capital coming to crypto, and that would bode well for the price action and for the development of the universe in itself. So I think that's it for 2023 and the outlook. And I think now up to why now and sort of why it makes sense to start thinking about a crypto allocation in your portfolio.
And so absolutely. So I think, first we're gonna, go again on this slide that we already shown in our previous sessions, but it's still a very early stage of adoption. Once again, we think that when we talk about decentralized application that, either on the DeFi space or on the, metaverse, digital culture, Web3 space, we think, it's still very early to consider the adoption of this decentralized application. We think that we are at a stage where Bitcoin start to have like, a clear use case, and that the infrastructure of smart contract platform and layer 2 that enable them to scale or either to interoperate, etc. That's the time where we are. So it's still very early, and that's very important element to consider. And on the next slide, we show something that is very basic, but obviously, when there's a consensus or when there will be a clearer consensus on these assets, it's very likely that their volatility is going to be reduced, right? And as a result, entering this asset class when there's a clearer consensus means regular size return, right? However, we think that the opportunity, one of the opportunity in this asset class is that it's still very contrarian to add crypto assets in a traditional multi-asset portfolio. But when it's contrarian and that you are right, that's when you can, do, a sized return. So, we wanted to put that, as a base, a basic reminder before moving to the next slides.
And I think now we'll tell you why now is a good time to be contrarian. And I think, Bennies are very often on the road, and some of the topics that we discuss with our client when it comes to why now, the first one is what we call the Bitcoin price cycle. I think when we ran this analysis almost a year ago, it was fascinating to see how Bitcoin prices seem to sort of repeat themselves. You have a bear market that lasts for 13 weeks, and it's been the case almost 10 years ago in 2014. It's been the case in 2018, 13 weeks, like 100%. And 13 weeks again, the last bear market. And then you have a recovery cycle, which is longer, like 23 weeks, 22 weeks. And based on our analysis, the recovery market is playing out right now, and it would last for about 22 weeks as well. And after the recovery market, then you have the bull cycle. But as you will see, the bull cycle is very short. It's usually 12 weeks. It's a period with tremendous growth, like 1,700% here, 300% here, and who knows how many. It was like 88, 100% for the first cycle back in 2013, right? So they're tremendous growth in the bull market, but they are very short. So your ability as an investor to enter when we are in the bull market is very unlikely, because you have little time to get into the trade. But even if you get into the trade, you would have gotten at the level which is higher already. Of course, you're going to have some upside, but we think that the better entry point is during the recovery period, which would be here. And now we are right at the middle of the recovery period, and starting to build a position during the recovery period helps you capture part of the upside till the end of recovery and enjoy the tremendous, upside that happened in the bull market as well. And recovery they've been serving investors pretty well. I think in average you have about 450% price increase over the 22 weeks of the recovery period. So now is a good time, because we are in the middle of the recovery. You get at a point where the asset is not that expensive, and you can enjoy some upside before the bull market comes in again and we claim the all-time high and all that. So recovery is playing out right now. I think, you guys have seen the price action over the past few weeks or months. So I think no one needs to be convinced that the Bitcoin recovery is playing out now. The second thing that we also spend a lot of time talking to clients about, and that's tied to the first two sessions of this training, it was around how, if you think about the fundamental of crypto and of blockchain technology, we are still very early stage. And that's why, because we are so early stage, we think that right now we are way below our long-term fair value trend. So based on some historical analysis, we built three price paths. So the baseline or the fair value is a gold colored line over here. And what our analysis shows us is right now we're actually trading close to the lower bound of the price range that we have. But as you will see, every 3 years or so, the price will go up and claim the upper bound of the range. So now is a good time because the asset class is undervalued and we are trading close to the lower bound of what historical analysis shows us we should be. So that's the second thing. So if the cycle repeat themselves, this is a great time to go long, to start building a crypto position and sort of enjoy some of the upside that will come until we reach the previous all-time high in the 70,000 range and even go further than that. And we think that's what's going to play out in the next 1 year or so. The third element that we spend a lot of time talking to the client about is the halving. I think halving is every 4 years or so, the Bitcoin inflation rate decreases by half. So fewer Bitcoin are issued from then on. What that means is it's very interesting because by then the inflation difference between Bitcoin and the real world, where inflation is like 4%, 5% right now, it's benefit Bitcoin because Bitcoin become a scarcer asset than fiat or the real world. So you have that inflation advantage toward Bitcoin, which is scarcer than what we have in the real world. But more interestingly, what we've noticed is investing before the halving generally yield great return, right? If you'd invested before the halving in general, your return is in the 10x to 20x based on what we've seen in the last cycle. So we think that knowing that the halving is coming in Q2 2024, one can start building a crypto position right now as a way of timing the halving. And in average, you'll be better for it because once the halving kick in, it also drives usually a lot of investors to come to the asset class as well. And the last bit of why invest now is the macro setup, as we've talked a little bit about. And I think from the macro standpoint, there's few elements that one can think about. One is, when talking about macro, there's always the risk of recession, which, we've talked a lot about this year because central bank were hiking interest rates and all that. But in general, what we find is that crypto is less sensitive to a recession risk because, the demand for crypto is global. So even if the developed countries are in recession, chances are that China, India, Brazil, all the large emerging market countries are not going to be in recession. So in balance, you will still have global growth. And since the demand for crypto is a global rather than a European or American phenomenon, we think that even a recession in Europe will not be a global recession and will not impact all that much the demand for crypto. So in that way, crypto is very different than other asset classes. And the inflation and the monetary policy are the two other things that are the two other macro factors that we find very constructive for crypto as well, right? Because we think inflation, the worst of inflation is mostly behind us. And from where we are right now, either the inflation will stay higher for longer where we are right now, or very likely it will actually start coming down. And with inflation coming down or staying higher for longer, the monetary policy is very likely to switch from hawkish policy to monetary easing. And as we know, monetary easing tend to favor risky asset. And crypto is, is the risky asset trade by design. So as central banks start easing the monetary policy, we think crypto will set to benefit a lot from it. And maybe one last point around macro is the geopolitical risk, right? I think this year was a great stress test for a lot of assets, and crypto one of them, because we had so many. We have the war in Ukraine, now we have war in the Middle East, and crypto, despite being a risky asset, instead of seeing a sell-off in the crypto asset, we've actually seen crypto asset going higher. So there's a little bit of that thesis that crypto could be a good hedge for geopolitical volatility and geopolitical risk as well. And we've seen that play out this year, and that's, I think, generally a positive sign for the development of this asset class. And we also have, I think, this were like more of the cyclical factor of like why now, but I think in the broader picture, we have long-term and secular reason for why we believe that it's still early for a crypto investment.
Absolutely. If you read our research, you'll see that we talk a lot about secular trends and the general shift. And clearly, the element that you see in the slides are things that we already covered, but the major network are getting ready, to go to that maybe what we used to call the internet broadband phase, right? So moving from a concept that can solve many things, but that is not usable efficiently, to something that will be, adopted by billions of users. We think that the Bitcoin narrative as a potential store of value, is getting, more and more understood. The regulation is progressing. In the next slide, we look at also, the generational shift. So obviously, the leaders, some are still very old, some are, younger generation, and also not to forget about the amount of wealth that is going to be transmitted over the next 10 years to younger generations. So, people who have children of 15 years old, I think they understand that all their life is digital with gaming. So it's clear as water that younger generation will move toward more digital solutions. And maybe on this point, just to as we said, that's one of the strongest element for next year. So Hashdex is in that race, right? We already have a Bitcoin future ETF that trades on New York Stock Exchange, and we are in the race, but with a very different strategy than the others, especially the fact that we are just requesting, the SEC to a switch of strategy. So we are very optimistic on that, and we think that things will happen in Q1. Maybe Dramane, since you are involved in our discussion with the SEC, if you want to detail a bit our strategy or more insights on that.
Yeah, no, sure. So I mean, I think the strategy, I think, is we've decided to build a full process that we think will make the SEC comfortable, because we're doing the trading and the sourcing of Bitcoin on CME, which is a regulated market. But I think, instead of boring you with the details of that, I think what is very interesting for us is really we have this global expertise, right? We know how to do crypto product in Latin America, in Europe, and in the US. And I think that's probably one of the most interesting things that we bring, the ability to help you understand the crypto market at large. But what is very interesting with the US is that for the first time, you have some of the largest asset management company in the world that would have a crypto product. And so for the first time, they will be able, you would see large institution selling or offering crypto product to their client. And we think that's going to be one of the biggest drivers of adoption, right? Because if you think about it, so far, crypto products were largely offered by, by smaller companies or crypto native companies. By having BlackRock, Fidelity, or Invesco offering crypto product, you're talking about people or companies that run 15, 16 trillions in dollars, companies that have like tens of thousands of staffers, and companies that have relationship with every capital allocator in the world. So this will be one of the best ways to push crypto to massive adoption, right? To your comment about the broadband moment of crypto. And what's also interesting is the US is such a large market that even if you're only thinking about, broadly the retail market in the US, I think you are the numbers that you have in mind for the US market alone it's larger than, Europe and Asia. So for the first time, it's almost like half of the market will come into play with a US spot Bitcoin ETF, and that's gonna be a great tailwind for adoption. And that's why there's so much attention that is given to this US spot Bitcoin product, because it has the potential of going mainstream, because the market is large and it's gonna be a product offered by some of the best asset management companies out there. And I think, yeah, and that's a good side way to think about how we think crypto should be, or how people should add crypto in their portfolios.
Yeah. So on that, we give us 10 minutes to cover that, and then we can look at. So there's already one question that we will actually. I think the answer will be by going through the slides, but at the end of the slides, I will make it clearer for your question on the market cap weighted approach. But as a way of introduction, this is very basic, right? But we believe, and we are a long only manager of crypto. We are. We are all our company, all our investors, we are backed by large VCs, by large family offices. Everyone, believes that, this technology is a revolution for the internet, thanks to and finally to the digitalization of the transfer of value. And as a result, we think that just, providing great product, long only, that do nothing unregulated, such as lending, for example, or that is not trying to get some alpha from the inefficiencies of this market, taking some counterparty risk. We want to give, simple long only exposure. So obviously ETFs and ETPs are our preferred vehicle, and we think the parameters of this product are way stronger than active funds or VC investment in terms of efficiency, transparency, liquidity, etc. So, that's why we strongly believe that it's the preferred investment vehicle to invest in crypto. And moreover, what's happening this year in terms of regulation in the US, especially like, what has happened with Binance, for example, is only reinforcing the fact that the regulator wants traditional investors who want to get exposed to these assets to go through regulated products. So that being said, we're going to go through, our way of thinking, how to invest. Obviously, we are focused on indices, so we think you should more think, about the type of index, as long as the index is well constructed. But on that slide, I think our founder, when he discovered Ethereum, so obviously Bitcoin was really strong, right? Having a decentralized network with scarcity, secured, super that you can transfer instantly value, was a major evolution, tech evolution. But when Ethereum came, and the fact that you can code and program a transfer of value, for him it was very clear that crypto is more than Bitcoin, and that's why we have this index approach. And if you look at this graph, I think, from my perspective, obviously the more the time, the less the Bitcoin dominance, the more the time, the more the emergence of new technologies, so in this instance Ethereum. And we believe that in 5 years this graph is going to be lower for Bitcoin and higher for some other technologies to come. I don't know if you want to maybe detail a bit this, Dramane.
Yeah, no, so maybe just one point, which is like the analogy, which is if you wanted to invest in a country, right? And would you invest in a single stock that give you exposure to just 50% of the country, or would you try and invest in a basket of asset that give you exposure to more than just 50%? And I think that's how we think about why you should invest in a basket rather than Bitcoin, because Bitcoin today is going to give you access to 50% of the asset class. It could be lower. It was 40% at times, and I think over time it will only go lower and lower because the crypto market will develop way faster. So having a basket approach to investing in crypto is actually how you get to capture the overall asset class instead of just choosing one, because as an emerging technology, what we know is that new development would happen and this new development, they would actually be outside Bitcoin and Ethereum. So you want to be allocated to a strategy that allocate to all of those in a very systematic manner, right? And one of the ways we like to talk to investors about is, be like, oh, this year was a great year for Bitcoin. That's true. And I'm like, by the way, do you know that even from January to September, Solana did 2 times better than Bitcoin. So if your game was to pick winners and single asset winners, Solana is a very well-known coin by all stretches of imagination. But it would have been most of people would have chosen Bitcoin or Ethereum. They would not have chosen Solana, which tells you, that's the risk of trying to pick the winner, because usually there's always something else that is better. And it's, if you look from October to now, it's even worse because, Bitcoin is at 35%. Solana has done 4x that. Cardano has done way better. Matic has done way better. AVAX has done 3x, 4x the performance of Bitcoin. Again, so that's the spirit of, instead of trying to pick winners, because you end up defaulting to certain token that you are more familiar with, but they're probably not the token with the most upside. Even in such a great year for Bitcoin, you had, over the last 60 days, you had at least 4, 5 very well-known tokens that have done better than Bitcoin. So that's why we believe that allocating to a basket, that gives you a systematic exposure to the market and to all these tokens without you having to think about how much should I put in Solana, how much should I put in Avalanche, is the best way of investing in the asset class. And it's the way that will minimize your regret of, picking one and realizing down the line that there are many smaller coins that have done so much better than that. And that's why we spend a lot of time talking about, the Nasdaq Crypto Index that underlies our flagship strategy.
Yeah, I think it's also important, to say that the concept of the Nasdaq Crypto Index, so it's a new product in Europe, but this index has been created, years ago. It's accessible through different products, our Brazilian ETF, our Cayman funds. We have a BTG Pactual partnership fund in Chile. We have a private investment fund in the US. So, this strategy exists since more than 4 years. It has very big assets, more of our most of our 500 plus million AUM is within this concept, and it's also important to know that Nasdaq is really engaged with us to make this index the benchmark for the asset class. We see a lot of index provider, traditional index provider coming with crypto indices, but unfortunately because they don't have like proper crypto in-house team, or the fact that their history is still very small, sometimes we think that these indices are not well constructed. So our view is that this index provides the best-in-class institutional index approach to be exposed to the crypto market. It's an evolutive index, so it's not capped to top 5 coin, top 10 coin. It's evolutive. You see here there's 10 token, but so that's as of end of November. On the 1st of December there was the new rebalancing, and there's a 11th token that has been added to the selection. So by this quarterly and rebalancing and this evolutive approach, this product will always be a good reflection of the broad-based and liquid crypto market. And maybe last point is important to say that in this index, never there's been any Luna, any FTT, any Binance, and that is by design because Nasdaq is under the SEC. So obviously, the way they define, core exchanges, core custodian in order to define the eligible investment universe is very defensive, and we think that. And I think that that's very important to keep in mind. Just on that graph, it's exactly what we said. The more the time, the more token covered, and also the more segment of crypto technologies are covered. And the good example, I think, is the fact that in September 2022, in September 2022 is the first time that the decentralized application has been added to the selection. In that instance, it was Uniswap. So Uniswap is a decentralized, so it's a DeFi token. It's a decentralized exchange, okay? And it was the first time, after years of existence. So, the more we go, the more spectrum will be covered. And that's all for me on the Nasdaq Crypto Index. Maybe if you want to just complement on the evolution, Dramane, I don't know.
Yeah, no, I think,
I know
to
what you
your
like. Yeah.
point, it's yeah, it's all about how the index is built, right? And I think the fact that we have such eligibility criteria that have made certain, we avoided FTT, Luna, and like many other indices, I think speaks to how much thought and care is put into this. And I think that's what the most important, right? Because we build this product so that investors don't have to think about crypto allocation. And part of that is making sure that they are not allocating to token that they would have problem with down the line, right? So I think that speaks to it very well. And we can clearly see that the number of token is going up over time from 6 to 10 and 11 token right now, actually, because that's how the methodology is built. And we think these dynamic market cap indices capture better the growth potential of the asset class rather than index that would only allocate to top 5. Yes, maybe 5 years ago, top 5 would have captured 90% of the market. But today, the top 5 would only capture maybe 70% of the market. But you need more than that. So the idea of, having, any of these arbitrary caps or exclusion that some indices have will sort of impair their ability to deliver performance and to deliver to you the potential of the crypto market. So it's important to really look under the hood at how the index are constructed and try to think hard about what are the arbitrary caps and limit to the number of tokens that the index might have, because that would detract from the performance. And I think NCIE works well for us, and we think this is like the core allocation that an investor should have if you want to be long crypto and capture the upside of the market. But as we're building our product shelf, we also wanted to add another product that is more momentum based, because we know not all the investors, some of the investors are already long Bitcoin and Ethereum and they want something else, or they want to think about what's the best way of weighting crypto in my portfolio. And momentum is just that, because the momentum is one of the strongest factors that you can find in financial literature, right? And the goal is to allocate to token that have had the best price performance over the past 2 months. And that's what the momentum strategy is about. But because usually when you do that, you end up allocating a lot to smaller token that could be more volatile and more risky. The way we build the strategy is that we also added on top of the momentum factor a risk parity, so that by doing that, we make sure that every token contributes the same risk to the portfolio. So that if, for instance, the momentum factor would have said, I don't know, 30% in a smaller token, let's say Litecoin, but because Litecoin might be more risky, the risk parity filter make it such that we penalize the weight of Litecoin. So that's how we are able to capture the momentum without exposing you too much to smaller token that could be more volatile. And that momentum strategy is one of the most known factors. So both retail investors and institutional investors like the concept of momentum investing. And as you can see, this is one of the most diversified index that you can find, right? There's like 12 token in it, but even look at the weight, right? The largest weight is 15%. The lowest is almost 4%. So you have like a very well balanced portfolio, and it's rebalanced on monthly basis based on your price performance over the past 2 months. So that's, I think it's either you have a core allocation that is, Nasdaq crypto index, or if you want to have like, a tactical flavor to your portfolio, having a momentum tilt could help you capture the growth potential and the price action that you see. And, we've run some back tests as you can see on this slide, right? Over the past 3 years of data or so, you will see that Bitcoin is the gold line. It did well, but in average, the Nasdaq crypto index or the basket would actually perform better than Bitcoin over that time period. Because as you will see, during period of bull market over here, for instance, you see how much the index goes higher, because the index is then driven by Ethereum and all the smart contracts that are not in Bitcoin. And similarly, if you compare the performance of both Bitcoin and NCI to momentum, momentum has an even bigger performance advantage in period of bull market. Again, because momentum would overweight smaller token. But as I've explained before, that allocation is not driven by any discretionary decision that Ben and I will make. It's driven by, the momentum factor, and the methodology is very clear. It's online. So I think that's what you get. And, a momentum strategy in average will pay you, will return more than NCI and Bitcoin. Of course, there's a little bit more volatility, but we think that the performance advantage more than compensate for the increase in volatility. And similarly, over the last 3 years, a Nasdaq crypto index strategy would have outperformed a Bitcoin only strategy as well. And as you see, the volatility difference is not all that much. So you are investing in a basket that is more diversified, that gives you more upside potential for a marginal increase in volatility and for a marginal, increase in drawdown. So that's really why we think for an emerging asset class like crypto, a well-constructed index such as the Nasdaq crypto index is the best way to get a long exposure to the whole asset class. But if you want to add a tilt, maybe you can think about momentum or thematic strategies. And I'll kick it to you, Ben, for to wrap this session up.
Yeah, sure. So just I'm gonna complement on a few things and also cover the questions that we have. But in a nutshell, at Hashdex, we just try to take the principle of the equity market and the ETF market and apply it to crypto. So we think that when indices are well constructed, traditional investors who don't have an in-house research team, trading team, expert team in crypto assets should think about like how I allocate in terms of weight to this asset class. If I want to be exposed to the market, as Dramane said, I just buy a market cap index, right? And if I want to tactically play a rebound, momentum factor can make sense. So one of the question is about like the capitalization weighted approach like ours, or some of our competitor products who apply like some caps. So our answer to that is very simple. Like, if we knew which of these networks are going to be, massively used, and if people in the room did know, I'm pretty sure that we were not doing this call, okay? We don't know. What we know is that this asset class and these technologies are going to be highly disruptive. So, we think that we just want to give an exposure to the market and don't take any discretionary bias when it comes to like a beta index. So in our view, we believe that for a long-term buy and hold strategy, not having caps makes sense, right? Especially in a recovery year where Bitcoin, has a tendency to perform ahead of the others, right? So that's the way we look at it. Some investor of us, buy or long the Nasdaq crypto index and think, maybe after the halving next year to maybe sell a bit of this position to buy some momentum. Some other, think about just allocating to momentum by year end or in Q1. So that's about the first question. The second question is around BNB. So BNB is a very high cap. So it's a Binance coin, very high cap token. Why it wasn't on the Nasdaq crypto index is by design, because in the rule of Nasdaq, all tokens associated to securities are excluded from it. So by design, by regulation, the Binance coin wasn't, and the way it is today shouldn't be, included in
exactly. So I think it has to do with the eligibility criteria. And as you guys will see, we wouldn't make an exception to have BNB in our index because we think it doesn't meet the criteria of the index, which is the asset has to be listed on two core exchanges. And by BNB being the token of an exchange, in certain cases, the people analyze it as like, it might be a high security risk, and certain exchanges don't list it because BNB is not supported by at least two exchanges and one core custodian. We cannot have it in the index. That's why it's not added. And for the quickly on the small cap product, I think, as Ben mentioned, right, the most important thing is to look at the index methodology and see how people are over allocating or not. How are they coming up with the weight that they choose for this asset? And it is transparent, and that this makes sense. The way we thought about it was by using a momentum factor, which is very transparent and rule-based approach. So it has to be rule-based. And it's also very important when you're thinking about small cap that there is like a risk filter, because smaller crypto don't have as much liquidity. So it's not as easy to build and replicate an index that allocate to small cap crypto because you don't have as much liquidity. So whatever, that strategy should be very careful in terms of how do you filter for these for this small cap token as well. And we think, yeah, a broad market cap index is probably the best way of starting your crypto allocation. And on top of that, you can add different things, you know, momentum or specific thematic strategies as well.
Yeah. Or even, you know, like in Brazil, we have two products that are single assets on Bitcoin and Ethereum. And we have some hedge fund, you know, they are long the Nasdaq crypto index and play tactically, you know, more weight on Bitcoin, more weight on Ethereum. But we think that the strategic asset allocation should be into the market cap evolutive index. The last question was about us on X Twitter. So me, I'm on Twitter. You can find me just at my first name, last name, but I'm not active at all when it comes to crypto. I more use it on the personal level. However, we are more active on LinkedIn if you want to follow, you know, our news. You know, I believe that we will organize maybe from next year a monthly call with Dramane, both in French and in English, maybe to give more like updates on, you know, what we hear on the street, give you some color, etc. So, you know, stay tuned. You will receive some of our communication. We will share these slides by a marketing email with all the replays of the 3 educational sessions we've done. And if you have questions, you know, you can contact Europe at hashdex.com. It's our European team in this address. But yeah, look, thank you very much for your time. It was a pleasure
Thank you so much.
to share our views, and looking forward to speak soon. Thank you, Dramane.
Thank you so much. Yeah. Bye-bye. Merci Ben.
Goodbye. Bye.